Hi, and welcome to our end of October update from the Wealthy Doctor Institute, physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with their current investment strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm David Ye, and in my book, The Busy Doctor's Investment Guide, I show you just a few ways where just a few adjustments each year can help build and protect wealth. Although the strategies in this book are easy to calculate each month, for those of you who are new to the concepts of the book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So for this month, we'll review the 20-month moving average system, as well as the sector server version of the market filter. Then we'll review the sector server version of the MRI system. Then we'll remind ourselves of the rules for the 25% stop loss system. Then we'll monitor the free sector server strategy that comes with any sector server subscription. So let's get started. So to review our system, we'll start with the first one, the 20-month simple moving average system, otherwise abbreviated to the 20-month SMA system when you see the shorthand. All this is if the price of the S&P 500 index mutual fund is above the 20-month moving average, it's relatively safe to stay invested in the index fund. Otherwise, get out. Remember, the 20-month moving average is our safety belt. It only works if we watch it every month. And when we watch it, remember, just like how us physicians, when we order a test, we're obligated to do something with the results of a test. If we look at the 20-month moving average, we need to know what we need to do with the information. So here's what we do. Here's a graphical representation of the system. The blue wiggly line is the S&P 500 index mutual fund, dividend corrected. The red line is the 20-month moving average. Remember, every point on this red line is the average price of the S&P 500 index mutual fund for the last 20 months. So when the S&P 500 index is above the red line, it's relatively safe to be in the stock market. However, since we're watching this once a month, if 1 month it goes below the red line, that's relatively dangerous to be in the markets. So in general, you can see we've been making trades approximately once every 3 years. And if you can see also, we're in the markets approximately 70% of the time and out of the markets approximately 30% of the time. So we're diversified, just not all at the same time. And this past month, I know I've been getting several calls. Yes, October has been down a lot, so was February. However, despite tumbling down to 250, the moving average is still only 241. So the moving average is still going up even though the markets go down. Before we had a 12% cushion. If we do our calculation this month, we get a 4% cushion. So yes, we are close, but not quite enough to trigger a trade in this particular system. In contradistinction, let's look at Sector Server's version of the trigger called Storm Guard Armor. So in Storm Guard Armor, so far in October, we've been in the S&P 500 Index Mutual Fund. However, look at this negative trend and look at Storm Guard is minus. Take a look at the graph. Storm Guard finally dived into negative territory. This is danger zone. In fact, you would have received a trade alert on November 1st to get out of stocks. So if you follow the system, you'd get out of the S&P 500 mutual fund and go into the relatively safer investment, namely in this particular system, the long-term treasury bond fund. Now remember, no system is perfect. This does not guarantee that you're not going to lose some money. In fact, you already lost some money in order for this system to trigger. We're just hoping to avoid the larger multi-month to multi-year bear markets if we can catch them early enough to make a difference. Can there be false starts? Of course. Can we potentially get an alert next month or so to get back into markets? Of course. However, for now, if we follow a system, it says get out of the stock market, at least the S&P 500 Index Mutual Fund, and get into our alternative, which in this case is the long-term treasury bond fund. Now, for some of you who are seasoned traders, you would also notice that not only has stocks been going down, but so has the Treasury bond fund. If you think you could delay a few days entering the bond fund by using some kind of trailing stop buy order, then that'll be something you might want to make a decision about yourself. It's an advanced concept that I'm not going to get into in this video. So the observations for this month, the S&P 500 index did lose this month, not quite enough to trigger danger territory in the 20-month moving average system. However, it did drop enough to trigger danger territory in Sector Surfer's Stormguard armor system. So there's a trade alert. Under the 20-month moving average system, we have reduced our cushion now to only 4%. In other words, if this market drops 4% more or more by the end of next month, this system too will be triggered. Now, if you're following one system or the other, in other words, the 20-month moving average or the Stormguard armor method, remember to stick with your system. Only trade if that particular system triggers for your account that's handling that system. Don't combine signals. So the next system is the monthly rotation investment system, abbreviated to MRI system. As I pointed out, I no longer follow the version that is described in my book, since the sector rotation system described in Sector Surfer is both easier to use and produces more consistently better results. Again, nothing is perfect. And just to refresh our memories, the MRI uses 3 sector mutual funds: the S&P 500 Index Mutual Fund, the Emerging Markets Fund, and the Inverse S&P 500 Index Fund. Now, when you plug these 3 funds into Sector Surfer, do not use Stormguard. This is one of those few times I would not use Stormguard, just because the Inverse Fund is its own bear market fund. So, if you were to look at the MRI funds for this month, yes, both the S&P 500 index as well as the emerging markets have both crashed, and as a result the inverse fund went up. However, this system did not trigger a trade signal yet. Remember, every system is different. Not all systems trigger at the same time. For this particular system, a loss of this magnitude at this short time period is not considered dangerous yet, but keep an eye out again for next month. So overall observations of this month, both the S&P 500 index and the emerging markets fell. Even though the markets fell and the inverse fund gained, the rotation algorithm has not yet triggered a switch. So the next system we'll review is the 25% trailing stop loss system. So the rules for this particular system assumes that if you absolutely positively need to buy this particular stock for some strange reason, limit risk on that one stock to 1% of your portfolio or trading account. And here's the reason. When you buy a particular stock, that stock has idiosyncratic risk as well as market risk. In other words, if you have stock-specific news that comes out overnight, let's say there's an oil spill for that one particular stock, or there's some kind of scandal, that one stock might go down even though the rest of the sector is still going up. And when a stock-specific news comes out, it may not just tank during the day. Sometimes it may gap down during the day. And there is very little we can do to stop a loss of that magnitude in that way. So, if you want to buy individual stocks, you do it at your own risk. However, here's one method that you can limit the risk at least to a certain extent. So, if in order to risk only 1% of your portfolio in any one stock, you would buy with up to 4% of your trading account that one stock. This way, if you put a 25% trailing stop loss order and it gets triggered, that means you've only lost 1%. 25% of 4 is 1. And then, if the stock goes up 33%, you can go ahead and buy another block of stocks using another 4% of your account. Since when the stock goes up 33%, your trailing stop loss has now broken even to your original buy price, and your risk has decreased enough that you can go ahead and use another 4% of your account to buy another block of stock. and then of course update your trailing stop loss order to reflect the increased number of shares that you have. Keep doing this until you're stopped out. So our next system is your own sector server system. Now, I can't comment on your system. There's so many different systems, especially since you can custom make your own system. However, the sector server system does improve on classical pie chart investing if structured correctly. In other words, instead of buy, hold, and rebalance in a proportional way, you are serially monogamous over time. So you're diversified over time, just not all at the same time. And here's how it works. Sector Server has two main tools. It has, like the 20-month moving average, its StormGuard Armor filter to tell whether or not it's relatively safe or dangerous to be in the stock market. And then it has sector rotation to optimize momentum among the choice of stock or non-stock funds that you like to rotate through. So if you combine the two, if you follow a few rules to make sure you avoid certain common mistakes, you can produce your own system that could very well outperform a pie chart investment using the same funds that you choose. So, if Sector Server is properly set up, you will get trade signals through email and or text. You can set up one as a backup of the other. And then, if you're like me and be very anal, even though signals are usually sent out once every few months, log on periodically to make sure you did not lose or miss a trade signal. You don't have to, but you can, especially if you're like me and manage many different accounts. So, with every account, you get a free Sector Server strategy. So no, you do not have to pay for a subscription immediately. You get a strategy. This one is the example free strategy. It's not the best. It uses an older version of StormGuard Armor called StormGuard Acute Quick Response. It combines stocks and bonds, which it's kind of stupid since you're already using StormGuard. You don't want bonds as part of your stock mix. However, it's free, and in this particular strategy, there has been no trade alert yet. Remember, this free strategy uses an older version of StormGuard. That's why it's not as good. And you can tweak this in many different ways to improve it. However, at least this one is free. So, summary for this month, we reviewed our systems, the 20-month moving average system. No trade alert yet. However, the StormGuard Armor did issue a trade alert. We reviewed our monthly rotation investment system, at least a Sector Server version. We reviewed our rules on how to deal with stock tips. And then we quickly reviewed our free Sector Server strategy. So keep those questions coming. I know I talk to several of you personally each month, and I realize that for some of you, these video updates are not enough, especially if you're still unhappy with your current investment strategy or lack of strategy. I'm going to offer a complimentary investment wellness checkup session where it's just you and me. Ask all the questions you want, no matter how seemingly basic or clueless you think you are. There are no stupid questions. In our session, we'll together create a sense of clarity about the financial future you really want, the reasons why you're investing to begin with, and how to get you there, discussing investment building blocks that are more specific to your situation, determine what has stopped you in the past from getting what you want now, and identify what are the most important steps you need to take now to get your investing and financial goals, and then complete our consultation with the excitement of knowing exactly what to do next to create that road to the future you really want. Think CME, only the topic is financial, and tailored to you. Think wellness checkup, because whether or not you feel financially well, if you had financial cancer or a blind spot you didn't know about, wouldn't you rather at least know so you can deal with it before the problem grows and metastasizes? Don't be bashful reaching out. The more you delay, the more time is against you. So, until next month, invest safely.